Thanks for staying with us, everyone. Starting today, all exports from Ghana to the United States will be subject to a 10% tax in addition to other existing charges on these goods. Now, this move follows President Trump's announcement of reciprocal tariffs on several countries that impose tariffs on the U.S. products. Now, currently, Ghana levies a 17% tax on all U.S. imports. This new tax will likely make Ghanaian goods more expensive in the U.S. market. According to President Trump, the goal of this tariff is to protect U.S. jobs and products.
You know, we subsidize a lot of countries, keep them going, keep them business. In the case of Mexico, it's $300 billion a year. In the case of Canada, it's close to $200 billion a year. And I say, why are we doing this? Why are we doing this? I mean, at what point do we say, you got to work for yourselves and you got to, this is why we have the big deficits. This is why we have that amount of debt that's been placed on our heads over the last number of years. And we're really not taking it anymore. Through non-tariff barriers, the European Union bans imports of most American poultry. You understand? They say, we want to send you our cars, we want to send you everything, but we're not going to take anything that you have. Australia bans, and they're wonderful people and wonderful everything, but they ban American beef, yet we imported $3 billion of Australian beef from them just last year alone. They won't take any of our beef. They don't want it because they don't want it to affect their farmers. And you know what? I don't blame them, but we're doing the same thing right now, starting about midnight tonight, I would say.
All right, so how vulnerable is Ghana in the wake of these new tariffs on our exports to the U.S.? Lead data analyst here, Isaac Ufeji, joins me in studio to discuss how significant is it that the U.S. is imposing these taxes on Ghanaian exports?
Yeah, the equation is very simple. You tariff me, I tariff you. And what once started as just a campaign promise is now being materialized. And we should be thankful that we're actually in the lower brackets, because in fact there are three brackets, if I should put it this way: the lower bracket, the middle bracket, and those who are the worst offenders. So that worst offenders list, I mean, I have two lists here. The worst offenders list, I mean, the European Union is in that bracket. Remember that UK is no longer part of the European Union, so it allows the US to deal with EU proper. But I mean, there are also other countries who are also in that worst offenders list. Those who are at the top brackets, where Vietnam is one of them. China, definitely 54% reciprocal tariff being placed on China. But the reason why I said we should be thankful is that if you look at this list, the baseline list, those who suffer just 10% tariff, you know, slap, Ghana is in that bracket. And thankfully, we are in that same bracket with the United Kingdom. And so if you heard the ambassador of US to Ghana, he says that Ghana still remains a strategic partner to the US. But what we understand is that this is a reciprocal tariff. So it means that if you want America to have a 0% tariff on your goods, definitely you should also aim at putting the same 0% on American goods. But once we are charging or levying 17%, we should expect that baseline of 10% from the US. But I mean, it's not just Ghana that's actually in this bracket, but we are actually looking at the trade volume. Yeah. What is the trade vulnerability in terms of this announcement?
Well, before you go to this part of the slide, I just want us to go back. So what, the 17% tariff on U.S. products?
Exactly.
What were they charging us initially?
I mean, this is the 17%. I think the U.S. actually, depending on the bracket of the good, the bracket that the good falls in, sometimes you can even have some 0% tariff. Okay. But now the baseline is 10, so there will be no free lunch anymore. So the lowest tariff we can actually get should be around 10%. But there were instances, depending on the arrangement and the AGUA and other things, tariffs were a bit less. But we were imposing 17% on the average on most of the goods that were coming from the US. And we decided to quantify in terms of the trade volume between Ghana and the US. Stands out somewhere around $2.5 billion, dollars. Now, people are actually projecting that it could hit some $3 billion this year. But the question is, who needs who? And in terms of the vulnerability bracket, who is at the west side. So let's see what sort of vulnerability will Ghana be facing in terms of, this is the export to the U.S. Just look at Ghana's export to the U.S. And one thing you will realize, Darrell, is that when the Republicans are actually in power, we definitely do not really do sort of like business with.
Why is that?
I mean, the data is actually showing. Just look at 2017 and 2020. Look at trade volumes. You can see that cyclical movement up and down. I mean, but when you see the Democrats in power between 2020 and 2024, you saw trade volumes go as high as $2.8 billion, dropped to $1.2 billion, but still was rising to $1.6 billion. Not even around that low level of, let's say, $700 or roughly $800 million that we saw under that Trump 1.0 between 2016 and 2020. Yeah. That means that, U.S. definitely under a president like Trump, they will do business, or they will come to the negotiation table depending on your geopolitical muscle. Although Ghana still remains, a strategic partner to the U.S. In terms of the trade volumes, it is usually very high when there is a Democrat possibly in the affairs of the, steering the affairs of the U.S. Let's look at also who needs to. This is a big question in terms of export to the U.S. in red and imports from the U.S. in blue. Now, who needs to? So what you can see is that our imports from the U.S. has been plateauing, actually staying on a uniform trajectory between 2014 and 2024. Hasn't really gone up, hasn't really come down. But in terms of the export to the U.S., it always fluctuates depending on the kind of political power in office. And I made mention of the Democrats when they are in office. You can see this outlier here between 2020 and 2024, the Joe Biden era, where it went as high as $2.8 billion in terms of trade volume. But, when we are under the Republicans, you can actually see how close, export and import between Ghana and the U.S., the difference there, the gap analysis there is very, very marginal. But the story is different when you have, the Democrats in power.
Just by the way, I'm sure our audience will be wondering what exactly are we exporting to the U.S.?
A lot of things. Cocoa is part, cocoa beans is part. There are other, non-traditional exports like food items and all of
textiles.
That. Exactly, textiles and some artifact goes to the U.S. as well. But what we really import from them, definitely automobiles, also crude oil and other things. But definitely I was shocked when we saw the trade vulnerability report that in 2023, we're exporting more refined crude from Russia than any other country in the world. So that tells you that maybe when we look at the vulnerability analysis, maybe this might not be a big blow to Ghana.
So Ghana's top 5 export countries.
Yeah. In terms of the destinations, right?
I don't see the U.S.
The partners. The U.S. is not in this bracket. These are the top 5. And you can see that we export more to Switzerland, the UAE, South Africa, China, and India. U.S. is nowhere to be found. In fact, there is no EU country even in this space, right? There is no UK, there's no Netherlands, there is no U.S. So, in fact, it means that our trade partners actually changing over time, where we are exporting more to countries like Switzerland and the United Arab Emirates, definitely because of gold, right? Our number one, export destination in terms of gold definitely is the United Arab Emirates. And South Africa, we do a lot of trade with South Africa and China as well. But one thing that will be key is the import angle, because this is tariff, right, on import. So let's look at the trade vulnerability on the import angle. And there again, you can see the United States now number 5, right? But it is nowhere near the top 3.
If you look at the percentages, 56.8.
This is actually in billion. This is 56.8 billion Ghana cedis in terms of
9.9%.
Absolutely. In terms of, just look at this blue. If you compare it to what the U.S. is bringing, that's very small. Even in the red, it's also very small. But in terms of the cumulated figure, we import more from China more than any other country in this world.
Billions.
Absolutely. If you bring it into dollar terms, we are hovering around, let's say, roughly $2 billion or $3 billion from exactly. But although US is in the bracket in terms of the vulnerability scale, it is in that lower part. So we are hoping that maybe this 10% tariff, adjustment wouldn't really affect Ghana like the way it will affect countries like South Africa, the China and all of that. We should be possibly grateful that we are in the good books of President Trump at the moment, because we've been classified among the baseline countries. We possibly should hope that we shouldn't move into the middle belt or maybe the upper belt where you find China and other countries.
So again, in terms of vulnerability, what's your stance on whether or not we are really vulnerable to these reciprocal tariffs?
In fact, it's a double whammy for the country at the moment. When it comes to vulnerability, usually on the US side, it's about aids and technical support. That's where we are really vulnerable. But when it comes to tangible goods trading, vulnerability really is on the side of China and United Arab Emirates. So it's a two-sided coin. If you ask me about grants and aid, I would say that the US aid cuts will bite more or will bite significantly than maybe this current 10% tariff. So it's a two-sided coin, but I will place more emphasis or more weight on the aid side than the tangible trade, which according to this data we are seeing, although US is in the top 5, but in terms of vulnerability, it is always China and the UAE.
Great insight. Thank you so much, Isaac Ofeje, lead data analyst here at Joy News. We appreciate your analysis and the insights. Joining us all the way from the US is Professor Williams Wipra with the Andrews University. Hello to you. You've listened in on the conversation. What are the potential long-term effects of these tariffs on Ghana's economy, do you think?
Good afternoon, Daryl, and good afternoon to your viewers. Let me say that the tariffs that have been announced by Trump is going to first affect the whole world in terms of how each country prices their products. So even though it may seem like US and EU or other countries, let's say US and Ghana, prices are going to be affected. And this may lead to an increase in general prices. In the case of Ghana, as we were listening, it's going to probably cause reduction in Ghanaian export to the US market. And when this happens, we might expect that it may lead to some job losses in Ghana, specifically in the area of agriculture and manufacturing-driven sectors. And that is where these are some of the items we export to the US, and probably if the demand slows down, it's really going to affect our Ghanaian economy. Let me also say that this tariff is really also going to affect the current government agenda to focus more on exports. So they may have to start negotiations and see how best they can find alternative areas to export Ghanaian products.
Yeah. So, if you are the government of Ghana, what would you be thinking? How do you position yourself strategically?
So, strategically, we already have some avenues available to us. The African Continental Trade Agreement is there for us. We have a good relationship with the European Union. And our Asian markets, especially China and India, is also available to us. If they are not going to put tariffs on our exports, we may have to strengthen that kind of discussion, especially with AFTA, where Africans control our own trade agreements. And that is what is probably going to support our country. Another angle that probably, if we decide to make up for the revenue for, we know US will still need our raw materials. Ghana can decide to also bring an ad valorem tax on US raw materials if we decide to go on head-to-head with the US in that perspective.
Well, I know some countries are already planning that. I think I read just a while ago that the UK was, as early as Saturday, going to impose some new tariffs on the US. Is that a wise move for Ghana to retaliate?
So, as from your analysis, US is not within our top 5. However, if the action of Trump is going to affect businesses in Ghana. And let me explain this carefully. This price increase, there's something we call purchasing price parity, may lead to escalation or devaluation of our Ghanaian cedi very soon. It may cause inflation because in finance and economics, especially in international economics, purchase power parity must be equal. And tax, let me put it, this tariff is going to play the differentials. So it must be readjusted by itself in such a way that the inflation or the exchange rate situation, will have to balance out. And in the short term, we may see the cedi suffering a lot of some devaluation because of this tariff policy. That is why if Ghana wants to react to find a balance, we may also find a product in a way to tax it, which coming from the US to balance it out. If not, we may be in the losing end. That is why all the other countries are also going to retaliate, because if not, intentionally, their currencies are going to devalue because of this tariff impact.
Yeah, in our case, what would that be top of your mind?
So top of my mind, I mean, we already having 70% on it, and now the baseline is really going to reduce our exports, because it's going to make our export more expensive in the US, and Ghanaians or people will not be buying Ghanaian product. So straight away, it's going to affect our trade balance. When our trade balance is affected, it's going to have an impact on our balance of payment. When the balance of payment is affected, then your exchange rate will devalue. So this is the technicality, and that is where we really need to find a way to position ourselves. Do we need to look for other partners who are ready to buy our product if we cannot enter the US market or go on the 10% transaction? The last part, Ghana, a lot of the products we send to the US are non-traditional products, the food items. And now it's going to be taxed, 10% baseline. So businesses are going to suffer. Those who are into that agro industry are going to have that kind of issue. And already, I think Ghana had an agreement to the US, a trade agreement, which giving Ghana sending some items to the US at zero rated. This is the time that we may have to, is it the AGUA? We may have to start that negotiation to see if possibly if we can get maybe instead of the 10%, the 5% reduction to still help manufacturing in Ghana.
Yeah, while we wait to see how the government responds to this, only yesterday we were celebrating a slowdown in inflation rate. And earlier the governor of the Central Bank had pointed out that these external factors like the global trade war could impact inflation going forward. And so, again, how do you work this out, and what should we brace ourselves for, really?
So, our import prices into Ghana, as I mentioned, are generally going to go up, because I cannot sell a product to US at the same price as the different price to Ghana if they are of the same quality. So we may see that our inflation situation in Ghana may increase a little bit in the next 2-3 months.
A little bit?
A little bit. It's not going to be too much, because we don't import too much from the US. So we may see it coming, but not too much. If it were coming from our major trade partners, then we will really have that major impact. But generally, other countries are also going to increase their prices when we start this war. And that is the places where probably we have to be worried about. And this is the time to mitigate it, that we have to strengthen our local production. And then also, in my perspective, Ghana is well known for two main products, gold production and cocoa. This is the time that we may have to use our core competence to make a little bit noise, to demand, to make sure that the prices of these commodities also go up in the international market, to make up for any differentials that comes in. Remember, when Ghana and Ivory Coast came together to come out with a price on cocoa, the world reacted. So this is the time that partnership, we must work with our neighbors, that we may also call some shots to make sure that whatever shortfall that will affect our economy, we get it back from what we have strength on. Gold and cocoa are major areas that we can use it to also support our economy.
Hopefully, the government is taking notes. One final question, because it just makes you wonder what the end game is here for Donald Trump. There's so much talk in the U.S. right now about the potential impact of this on the U.S. economy itself. What's the game plan?
So, from the data we are seeing in the U.S., long in the U.S. already have their balance of payments is in deficit, but it has always been below 2% of their GDP. The way they are going, and anytime it's below less than 2% of their GDP, their currency is stronger. But projections are putting it that probably their deficit may exceed the 2%, which may weaken their currency. And the way to address it is what Trump has done, is to make sure that he increases the revenue base of the country. So how he is going to increase revenue base in the country is to bring this ad valorem tax. Note, the taxes is put on is not going to be paid by external countries, but it's going to be paid by those of us who are in the US. So that money is going to increase his revenue. And when he increases revenue, it may trickle down to have an impact on his GDP and development. The other negative side of it is that other countries are going to suffer. We call it beggar our neighbor. And that is what the effect that we are all talking about. So in the US, he as Trump is making sure that he maintains a strong economy, a strong currency, and also create employment for his people. There is mixed reaction in the US. Some support it. Some say, his policies is going to affect us. So this is what is really going to happen. In my perspective, it may take about 1.5 years to see a total correction of the US market, so that the whole world economy will be able to understand the trade policy that Trump is bringing. He's just making sure that the US economy becomes stronger, and he's protecting his people. But the people inside also think that, because we have been importing from cheaper source and consuming and getting a higher returns and bringing it in, we are going to tax us. One last thing, probably, which is underlying factor, Donald Trump, from his speech, has an intention to do away with income tax in the U.S. There are 6 states in the U.S. that do not pay income tax, but they are really prospering. One is Florida, one is Texas. Okay. These countries relied on ad valorem tax to make out for income tax. So that is where Trump is probably leading towards. He wants to remove probably the income tax and then replace it with ad valorem tax. And that is why we see all these things.
Well, I guess time will tell whether this works or not. We'll keep watching. Thank you so much, Professor Williams-Wipra, Associate Professor of Finance at this university. I appreciate your insights here on the marketplace. Before we go, I just want to read these stories over just quickly. Some of our headline stories. The Ghana Revenue Authority instructing all financial institutions and relevant entities to cease charging the e-levy following the issuance of a Gazette notice that provides legal backing for its repeal. Also in our headlines this afternoon, several oil marketing companies have begun lowering petroleum prices at the pumps, contrary to previous forecasts that suggested a slight increase. We'll bring you more on these stories in our subsequent bulletins. My name is Daryl Kwao. Thanks for watching. More news on our website, myjoyonline.com/business. There you go, myjoyonline.com/business. We'll see you same time tomorrow.